Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, yesterday was a super challenging day. Uh, I think I lost a 0.5% on the day on all my holdings, which is a lot for me um, since I'm somewhat risk adverse. But I'm going to do this update on copper just because I've never seen anything like the price action yesterday in copper. It crashed in one day, down 25% or so. And then I think it's down another 3% today. So I may do each commodity separately because if I put them all together, all the buy recommendations would be way too long. And then I'll do one on stocks, and I'm going to do that today. So let's get into it. Copper. Again, what a crash. Now, this chart I'm showing you is looking at the US dollar, and I think this is really important because whether you're buying copper, silver, gold, um, silver mining stocks, gold mining stocks, any of those things is going to be affected by the US dollar. Now, the correlation is not perfect, and uh, historically, metals and the dollar have gone up, commodities in general, and the dollar have gone in opposite directions. So, knowing what the dollar is doing is really important. But again, these are tendencies. There's times when they can that negative correlation can fall out of vogue and go for 6, 7 months without it mattering, and then all of a sudden it does. But what I'm going to show you here's the US dollar. This is it. This uptrend here. You can see that oil followed it pretty well, this black line. And you can also see that the red line, which was, let's see, I can hardly see. I'm sorry, I got that wrong. So the black line is metals. So when the dollar was going up here for a while, kind of sideways, the dollar metals were going up for a while, and then they reversed and they started going down in a negative correlation with the dollar. When the dollar started to decline, look at gold. Gold, and this is actually gold, but the metals pretty much go together. So you can see how gold took off when the dollar crashed. And you can see this ending diagonal, which I was monitoring. We had an A, B, C, D. We should have had one more touch down to the bottom, which would have been E. And this is an ending diagonal found at the end of major market moves. And we didn't get that. We got a truncated last leg down. And then we got a breakout in the US dollar, which has caused all this fluctuation in the metals. And so now it's like, well, what do we do? Do we sell all our metals? Well, I'm kind of holding pat right here, no pun intended. You can see that all the moving averages. Oh, one other thing. Yeah, okay. So all the moving averages have come together in a bullish rainbow convergence for the dollar. So what should happen now is the dollar should either sit here for a while, which would mean that metals and gold would sit here for a while, or a type 2 retracement is it will come back to that uh, convergence, to the rainbow convergence, which I'm kind of expecting here. And if that happens, we'll get a bounce in metals, most likely, and then we'll see if the dollar can hold. If it comes back here and it holds, then it promises a higher high, and I'll be selling a lot of metals. If it comes back and it breaks through this rainbow convergence, that's very bearish for the dollar, and that would mean the metals' next leg up is upon us. So we're at a real interesting juncture. And again, this is a tendency. It's kind of like seasonality, but it's definitely something to pay attention to. And so that's just kind of where I'm at on silver, gold, copper. Those are the things I'm going to be looking for. The red line up here is actually uh, crude oil. And so you can see crude oil is kind of, I believe, yes, crude oil. So crude oil has a tendency to kind of move a little bit more in line, even though it's not perfect here with the dollar. So, if we get a retracement and it holds here in the dollar, I'll be selling a lot of metals, and I may be looking to oil uh, as a commodity to buy. So just some thoughts out there, a lot to digest for you. These are Akamoto wave clouds, and they're just like our trend lines. This is a bearish trend line or a bearish Akamoto cloud. And so you can see we're hitting our head on the top of that resistance line in the dollar. So that's just kind of what I'm looking at there. So now let's take a look at copper. So this is the ETF, CPER, that we've been buying. Here's where I first got involved. Here's where I went neutral. Here's where I bought again. Got stopped out with a little bit of a loss. Bought it again. Made some money there. Bought it again. Lost some money there. Bought it again at just about the same amount. And as you know, I've been saying sell, sell, sell on the way up because our price projection here is 42 and we got to 37. So, we're, you know, I don't know, 10% away. We were 10% away from the top before we got this unbelievable 24% down day yesterday. So, and I think we're down a couple of percentage points more today on epic volume. So, um, we had a negative divergence here. So, uh, if you remember, the last update I did on everything was on a Thursday, and I said, or Friday, Friday, I think it was Friday, and I said on Monday, if copper is up, I'm going to be selling. Same with silver, same with a lot of the commodities, which I did, but I still have some. I still have some. I did nothing yesterday. I let the dust settle. I'm watching this. And so, getting to look at it last night and today, I got hopefully some more clarity. So let's look at the shorter term chart of this. And so here we are. We had no negative divergence up here at the top. That's strange. And then we broke through all our moving averages all the way down. We're slightly oversold on the daily chart. And you can see all these moving averages are coming together in a bearish rainbow convergence. So the dollar on a weekly chart, a longer term chart, has a bullish rainbow convergence. Copper's coming into uh, a bearish rainbow convergence. So I'm expecting prices to drift lower the next maybe today and tomorrow. And then when these lines touch, I may buy a small amount of copper, trying to, uh, if we get a type 2 convergence where prices come back to this rainbow convergence, this bearish rainbow convergence, I can make quite a bit of money from here to here. And then when it gets up here, I'll be probably sell half of what I got and then my overall holdings and then see if it can break through. If it doesn't break through, then I'll get out totally. Last thing I wanted to show you, this is the actual copper futures commodity. This is what the big boys follow. And I want to get a quote on copper here real quick because this was at the close yesterday. We did not break our bullish trend line. And, those of you that have watched me before, point and figure charts are the purest form, the least subjective, really true supply and demand only. And so far it's holding. Right now, copper is at 437, and I believe it would have to break 425 to break this bullish trend line. So I will really be watching this for an hour. Like if today, if it collapsed the second half or tomorrow, I'm not sure. I'd probably sell half of the small amount I got. At one point I had 5% in copper. I think I was down to like 1.5% or 2% as of before this crash. And, I might up that by a half of a percent to take advantage of this possible type 2 retracement back to the convergence when it happens. And then if it can't break through that, I'll get rid of it all. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Adios.